Coming up today on LinkedIn News Live, residential real estate is on fire, but the rental market is struggling. Are we seeing another bubble about to burst? We speak with the Chief Economist at Redfin about the state of the housing market and what it means for both buyers and sellers. Plus, the latest from LinkedIn's Workforce Confidence Index. All of that coming up next. Hello, I'm Devin Banerjee, and welcome back to LinkedIn News Live, where the business conversation begins with you. Today, we're discussing the housing market, but first, a look at the top headlines. U.S.-backed lifting vaccine patents, Biden blocks the gig worker rule, and individual confidence is rising, according to LinkedIn data. Let's take a deeper dive into that last story and what it means for those in the industry. LinkedIn members across the U.S. were asked how they felt about their job situation, personal finances, and career outlook. 82% of surveyed individuals indicated that confidence has climbed versus that difficult April to June period last year. Here to dive deeper into this for us is Jordan Dahl, editor at LinkedIn News. Jordan, thanks for joining us.
Hi, Devin. Thanks for having me.
So what are some of the factors driving this uptick in confidence right now?
There are really three factors at play here. The first is that our overall unemployment rate has dropped. In March, it was 6%, down from December's 6.7%, which is always a good sign in the economy. Secondly, states are loosening their restrictions and they are reopening, and businesses and companies are really hopeful that this time it will be permanent and that we're not going to go back into lockdowns as more and more adults in the US are getting vaccinated. And the third is that we had these massive stimulus bills that put money directly into the hands of consumers with these stimulus checks and these payments to businesses. So people are ready to get out and they're ready to spend.
Very strong, compelling factors there. Let's take a look at the ranking and the survey results. Jordan, share with us which cities rose to the top in terms of confidence.
Yeah, the big story here is hiring. Tulsa is leading the way because of the high number of jobs that they have available. Pretty much regardless of your industry or function, you will be able to find a job listing up there for you. In Richmond, their local unemployment rate is down to 4.9%, which is why they are high up on that list. And Las Vegas, you'll see, is also on that list. And the reason there is that they are reopening. People are going back into the city. I was just there a couple of weeks ago, and the hotels all said this was the first week that they were at full occupancy since the pandemic began. So people are really eager to get out and travel again. And international travel is difficult, but we have these domestic tourism spots that people are flocking to, and they are seeing a much bigger rise in confidence and more hiring because of that.
Jordan, you are our editor with the finger on the pulse of small businesses across this country. What does this rise in confidence that we're seeing almost nationally mean for small businesses?
It's really good news for them. Small businesses have struggled so much through this pandemic, but with these reopenings, they're ready to get back to normal. And that means hiring. Now, people have probably seen these hiring signs in window shops, all over the internet. Small businesses are hiring like crazy. And they're having a really hard time finding workers. A National Federation of Independent Business survey found that 42% of owners have jobs available that they are not able to find applicants for, or qualified workers. And these businesses typically get overlooked when people are looking at which companies to apply for. Maybe they want to go for a larger firm. But our data shows that if you are looking to grow your career, especially in sales and operations, you should be looking at smaller businesses. These workers report having higher confidence in their skills. They feel like they're growing. They also say that they are more confident that they're going to be at the next level in their field. So there's definitely some pros to going at one of these smaller firms versus some of their larger competitors.
That is so fascinating, and certainly a trend that we're going to keep our eye on as this economy reopens, and hopefully we can check back in with you in the near future.
Would love to be back. Thanks for having me.
That was Jordan Dahl, editor at LinkedIn News. Now you can check out the LinkedIn Workforce Insights newsletter, published every Thursday, for more data-driven journalism on the world of work. Now, the pandemic has had an unprecedented impact on the housing market, but not in the ways that you might have expected. Houses were being sold above asking prices, while rents in major metropolitan areas fell as work from home became the new norm last year. Now we're seeing a slight cool off in sales, though prices and mortgage rates continue to rise. Joining us now to unpack all of this and share with us her outlook is Daryl Fairweather, Chief Economist at Redfin. Daryl, thanks so much for joining us.
Thank you for having me, Devin.
I'm so glad you're here because there are many head scratchers when we think about the housing market over the past year. I get questions all the time from my friends and family about what is going on and why is this happening. So I want to start by asking you, looking back over the past 13, 14 months, why did the housing market become so red hot during a jobs crisis, a health crisis, an economic downturn?
Right. So going back to when the pandemic first happened, there was this huge slowdown in the housing market. Everything was at a standstill with the stay-at-home orders. People were taking their homes off of the market. Home buyers weren't going on tours. But then once people kind of figured out how to do things in a socially distanced way, the housing market came right back, primarily because mortgage rates were so low and people were spending so much time in their homes that they really started to think about how they wanted more space or how nice it would be to live in a different area if they could work remotely. So all the factors have been in place to create this surge in the housing market. And even though there has been this economic recession going on, there have been people who have actually been doing financially better during the pandemic. Their stock portfolios have increased. And the one place where they can put their money and spend it when restaurants are closed and they can't go on vacation is the housing market.
Yeah, you mentioned several things there that we're going to dive deeper into: mortgage rates and incomes and savings rates. One question, though, for you, Daryl, that I get asked a lot is why the housing market and the rental market really diverged, especially around the major cities last year.
It's for those same reasons I mentioned. So lower mortgage rates makes buying a home more affordable. And if your rent hasn't changed, then you may leave behind your apartment and go buy a home because buying a home is just cheaper because of the low mortgage rates. Also, the migration patterns that we're seeing, people leaving big cities that tend to have more rentals for more suburban and even rural areas where you see many more for sale homes, has changed the mix of homes that people want. They don't want to rent in the city, they want to own a home in the suburbs or out in the country.
Daryl, let's take a moment to say hi to some viewers joining us in the stream. We've got Rhonda from Houston, James from Columbia, South Carolina, Vicky from Canada, Alexander from Georgia, and many more. Thank you for joining us. Remember, you can put your questions for Daryl in the stream, and I'll do my best to pose some of them to her during this conversation. We'd also love to hear from you, the viewers, on our question of today, which is, what is your top priority when considering a home purchase? The home price, the sticker price, or the mortgage rate, location, or something else? And if it's something else, let us know in the comments there. Daryl, you mentioned migration patterns, and a lot of people were blowing the data out of proportion, I think, last year, and saying everyone is fleeing big cities. What did your data show exactly about migration patterns last year?
Before the pandemic, according to our Redfin data, about 26% of people were looking to leave their metro area for a different metro area. And then during the pandemic, that increased to 31%. So it's not that everybody is leaving, but it is a much higher percentage of people that are leaving their metro area. And that doesn't even count the people who are leaving, say, the urban area of a place like Seattle, for example, and going out to the suburbs or even to a nearby smaller metro that's still in the greater metro area like Bellevue or Tacoma.
So we've talked about what's been happening over the past year up to now. Let's look forward a little bit, Daryl. I'm curious, and I'm just going to ask you directly, is the housing market in a bubble? What is your outlook going forward, and what could change this trajectory? What are some of the triggers that could change this, this course that we're on?
I do not believe the housing market is in a bubble, because if we're in a bubble, then we would expect it to pop, right? And I don't see anything that could pop the 20% home price growth we're seeing right now. Home price growth will stabilize, but that isn't the same as a bubble popping. And the reason is that the people who are buying homes can actually afford them. Credit conditions are tight, so you have to have a really good credit score. You have to have a lot of wealth to bid $10,000, $100,000 over asking price. So these people aren't the kind of people who would be underwater on their home if the economy took a turn. These are people who have a lot of savings and they just happen to decide that they want to buy a home. And then another thing driving up home prices are some supply constraints. we had this big increase in people wanting to buy homes, but the housing market can't just turn on a dime and build more homes. Builders are increasing the number of homes they're building, but they're facing challenges too, like high lumber prices and their own labor shortage.
You mentioned credit conditions, Daryl, and this brings me to a question in the stream from Wesley asking, what's different or the same compared to the housing market of 2008?
So nowadays you have to have really good credit to buy a home. You have to have like a credit score over 700, or I mean, maybe you can get one with a lower credit score, but then you're looking at homes that aren't as competitive. It's both sellers who have all the power, who are going with buyers who are really well off, who can afford to pay cash or put down large down payments. And it's also the lenders who are only looking at people with really good credit because they don't want to take on risk. And also, since 2008, there are a lot of regulations that were put in place. So there aren't subprime mortgages going out because lenders aren't technically allowed to give out these subprime mortgages anymore.
Speaking of lenders and rates, Daryl, what is your outlook for mortgage rates? And I know this is tied to larger factors like the decisions of the Federal Reserve, et cetera. But it seems perhaps that we've seen rates bottom. Is that your take?
Well, since at least the 1980s, mortgage rates have trended down. And I mean, they're really, really low now, but I don't see them really going back up too much just because that's the trajectory that they've been on, that debt has gotten cheaper and cheaper. Right now, the Fed has set the federal funds rate to 0, and the Fed may in the future increase the federal funds rate, which would tick up mortgage rates. But there are some other things that could happen in the short term. If inflation increases, if the cost of all the goods that we buy increases to the point that the dollar is worth less, then lenders are going to want a higher interest rate to make up for the way that inflation is degrading those loans. And also, if the economy starts to do really well to the point that investors want to put their money into assets other than mortgages, maybe riskier assets, then that would also increase mortgage rates because they would expect a higher return on investments into mortgages.
We did see some lenders step in during the height of that pandemic and put in place forbearance and relief policies. I want to bring you a question from Scott in the stream. He says, will there be a number of sales next spring as mortgage forbearance starts to kick in and foreclosures may increase? What do you think?
So the Federal Reserve did a study to look at how much forbearance has restricted the supply of homes. And they did find that the decrease in the supply of homes has been related to forbearance. So when forbearance ends, we do expect there to be more homes on the market and the market to get a little bit less competitive, but that's not going to really impact the value of homes too much. Like I said before, we may see home price growth slow down, but it's not going to go negative. We're going to see more affordable homes for sale. Most of the home purchases that have been happening right now are actually at the very high end. It's wealthy people looking for luxury homes who are selling and buying homes, whereas people who have more modest incomes, who maybe were more impacted by the pandemic, have really just been staying put. They're not the ones who are buying or selling right now.
Daryl, you mentioned inventory and I think construction. That has become really evident, the lack of inventory and new construction. Now that the pandemic is coming under control, I think we can all agree here in the US at least, do you think we'll see a change in the rate of new housing construction?
So new construction has been impacted by the pandemic because the pandemic limited lumber mills' ability to keep up with demand. And also there's just so much demand that it's really hard for builders to keep up anyway. So I do think that as we get further away from the pandemic and lumber mills are able to increase production and we get a little bit more lumber prices will moderate. And I also think that once interest rates go up, that will reduce demand a bit and also reduce builders' capacity to build so much. So there are a lot of factors at play. I think that the conditions are really good right now for builders in general because people are willing to spend so much and they're not really batting an eye at these higher new home prices. I don't know if it's really going to get that much better for them even post-pandemic. They'll probably still build, but I don't foresee some big surge.
Daryl, we have tons of people posting in the stream, loving getting your insights right now. It looks like people are coming back to that concept of foreclosures quite a bit. I know you mentioned the Federal Reserve's study at the impact of lender forbearance programs and measures, but Kevin in the stream is still asking, is there a foreclosure crisis perhaps coming among lower priced houses?
So during the pandemic, home prices have increased so much. They're up 20% year over year. People have a lot more equity right now than they did before the pandemic. So let's say that you entered into forbearance before the pandemic and maybe your home was worth $300,000, and post-pandemic, let's be conservative, your home is worth $330,000. That's $30,000 in equity that you could actually go to your mortgage provider and refinance. And given how low mortgage rates are, you may actually end up with a lower mortgage payment post-pandemic than before pandemic, even with all the missed payments that you've had. So I don't think that we're going to see a lot of distressed sales, because all the conditions are there for people to either cash in on their equity by selling their home or to go to their mortgage provider and negotiate a refinance. And also at the federal level, the Biden administration has signaled that they are going to pressure lenders to be very accommodating of people in forbearance, to give them these options to refinance. So they don't have to sell if they don't want to.
I want to take a moment to say hi to some more viewers joining us in the stream. Lisa from Raleigh, North Carolina, Emiliano from Miami, Bill from Florida, Kimberly from Jacksonville. Thank you all for joining us. There are many more joining. Please put some of your questions for Daryl into the stream. I'll do my best to bring some of those to her. And I want to bring up that poll again that we have been asking viewers, which is, what is your top priority when considering a home purchase? Is it that home price? Is it the mortgage rate right now? Is it the location, or is it something else? And if it's something else, please let us know in the comments. And Daryl, one question we're getting, and that I think all of us get from friends and family, is for people thinking about starting the home buying process or continuing on that journey, what should they really be thinking about right now? What are some some factors they should keep top of mind? Some things they should look out for, perhaps?
Really, the most important thing when you're buying a home is to make sure you select a home that you plan on staying in for the long run. If you plan on staying in the home for more than 5 years, you don't have to worry so much about fluctuations in the housing market, whether home prices are going up too fast now or they might slow down next year. If you stay in it for the long term, you're more likely to build equity, and it's just, you don't have to worry so much if you're buying the home to actually live in it instead of trying to buy the home as some kind of speculative asset. If you like the home, that's what's most important. And another thing I'll say is that a lot of homes are selling for above list price. The average home actually sells for more than what it is listed for. So don't get too caught up in what the sticker price is on a home, because you're probably going to face competition. Almost 2/3 of Redfin buyers face competition when putting an offer on a home. So be prepared to go above the list price, which may mean that you have to look at homes that are priced a little bit below what you're actually willing to pay.
Daryl, you work at Redfin, and I'm so curious to ask you about the role of technology, the evolving role of technology in the housing market and the home buying process. So many of us, spend a lot of time every day looking at Redfin or some of your peers, Trulia and Zillow and others now, which is so different than the process a decade or two ago, of course. There's also, even on the lender side, I wrote last year about our #1 LinkedIn top startup in 2020 was online mortgage lender Better.com. There are so many online lenders entering the space. What has the impact of technology been on the home buying process and the housing market?
Going into the pandemic, there was a lot of technology in place to allow people to find a home, mostly online. You can go to Redfin and search for listings. A lot of homes have 3D scans where you can walk through the home and look at every nook and cranny, go up, go down to the basement, wherever you want to go. And during the pandemic, people really started to utilize that technology a lot more. Before, it would be that you would go on open houses every weekend for months, kind of looking at homes in person, figuring out what you liked. During the pandemic, that all changed, and people look at homes online, narrow it down to just the 1 or 2 homes that they are really serious about, that they want to see in person. They'll arrange for a private home tour to avoid other people during an open house. They'll see it once, and then they'll put an offer in on the home. And also, because the housing market is so competitive, almost half of homes are selling in under a week. So you really do have to do your research ahead of time, because once you view that home, it's going to be off the market in under a week. So you have to be prepared to make an offer basically right away.
Wow. Daryl, final question for you. Because this is LinkedIn, I want to ask you about the jobs angle to the residential real estate market and housing market right now. Is there hiring occurring in different pockets of this space, whether in construction or development or realtor roles or other adjacent jobs? What are you seeing in terms of hiring?
Absolutely. Redfin is hiring. We're trying to get plenty of agents so that we can meet all of this demand. Redfin is a bit unique because we hire agents on a salary. We provide health benefits. Most agents go independent, so they're independent contractors. They cover their own expenses. But with Redfin, we're actually hiring people and we're trying to hire big. And it's not just in real estate roles, it's across Redfin, whether it's our analytics department, our engineering department. We have a title company, we have our own mortgage company. So there are so many roles that support the real estate industry at Redfin. And because the housing market is doing so well, we're trying to hire as much as we can to really grow our business and take market share.
Well, you answered a lot of questions on my mind and on the minds of our viewers. Daryl, I want to thank you for spending some time with us today.
Thank you for having me.
That was Daryl Fairweather, Chief Economist at Redfin, dissecting the housing market. Let's check in on those poll responses from the poll we showed you earlier. We asked, what are your top priorities when buying a home? Some of our viewers, like Adrienne, said another priority is her top priority, which is a safer neighborhood. Scott said, I would rather have a lower principal balance than a higher interest rate right now. And Rory says the most important factor is the mortgage rate. So obviously many different approaches right now to the home buying process and market. And we hope Daryl helped answer some of your questions for you. Don't forget to join us tomorrow. My colleague Andrew Seaman will be speaking with one expert about how to differentiate yourself when applying for jobs. I'm Devin Banerjee. Thank you so much for watching LinkedIn News Live.